Commonwealth Bank have now predicted the exact day which interest rates are going to drop. This is the article right here, but basically they predicted that the interest rates are going to start dropping as of the 18th or the 19th of March next year. From right now, that's about 7 months away roughly. After the last year or more of rising interest rates, the average interest rate going from like 2% now to like 6.5%, they've basically tripled. They're now looking like they're starting to come down. Now, if you look at some of the previous videos that I've done about interest rates over the past year, I did predict that they were going to be cut in 2024. To me, it was always inevitable because you look back throughout the last 10, 20, 30, 40, 50 years, whenever they've increased interest rates, usually there's a time period of usually 12 to 24 months, and then the interest rates come back down again. There's always like a hard time, a painful time. And I've been telling all the clients, all the investors and people that I speak to every day, if you can invest in times that are really, really hard, when the interest rates have been as high as they are now, and the highest they've been in the last 11 to 12 years, then when the interest rates get cut, the cash flow will really be a lot more higher. Because if you buy a property as an example and you get an average yield of, let's say, 8% right now, and the interest rate you're getting is like 6.5%, so you might only be getting a very small bit of cash flow coming in. That cash flow might just barely cover council rates and water rates and management fees and insurance. But when you're getting that 8% or 8.5%, and then you're getting a 6.5 interest rate, they predicted that they're going to drop the interest rate by a whole percent. So they might do it over, 2 to 3 drops of a quarter or 0.5% as an example. That would make the average rate go from 6.5 to now 5.5 or 6 to 5. Your cash flow is going to be increasing. For one property might not be that much, but if you've got 3, 4, 7, 8, 10 properties, if the interest rates drops by, let's say, 1%, with a massive portfolio could save you a couple $100,000 per year, which would then make you have more cash flow coming in to give you more options to do what you want when you want. Pretty much to me, this is exciting. What does this mean? Having articles like this starting to pop up. So this is basically saying the senior economist at the CBA chief economist, Stephen Hamelek, I can't pronounce his name. Basically, he's now predicted that as of March next year, start cutting the interest rates. The first article came out, and then I've noticed another one the next day. I think another one's come out this morning, starting to appear in the media. To me, it's logical. The more that this appears, the more that people are that sentiment's gonna be out there, the more it's gonna be in the atmosphere, and the more investors, homeowners, and people are going to see this, realize this, and then the more they're going to be turned off not investing, and then the more they're going to be investing. For the people that have been investing the last 6, 12 months, amazing work, great work. You haven't let the negativity of the media and the current environment stop you, which is great. I haven't let it stop me, so you shouldn't let it stop you. Over the next 6, 12 months, as we see more of these articles come out, the atmosphere, the sentiment's going to change, and it's not going to be as negative anymore. It's going to be like, well, they're going to cut them again. And then once they start cutting them, it's going to be that whole free fall with people think, oh, they're going to cut them again in the next month or two, or the next month or two, or the next month or two. So then it's going to be go from negative atmosphere to positive. And then when it's positive, that's when usually the market starts, jumping up a lot, and a flow-on effect, because people start buying more properties, they start spending more money because they've got more cash flow coming in for whether it's their own mortgage that they live in or whether it's the investment portfolio that they have. But there's going to be more cash flow floating around the more they drop the interest rates. Now's the perfect time to get in. It's always a great time to buy property. Whenever you can afford to buy property, I would buy one. It's a very interesting time, so keep an eye out in the media, check for the articles as an example, because I suspect that you'll see a lot more of those over the next 3 to 6 months, and it's going to start turning into a positive atmosphere again for property investors. Just want to share the good news. Thanks for watching, and I will see you in the next video. Bye for now.